I think the fact is that the consumer is managing through the process in a very difficult environment. The headline and the data continue to indicate that inflation is manageable. If we settle in between a 2 to a 3% net inflationary environment, I think that is a reasonable place for us to be. It continues to provide growth for the economy. I think it continues to spur a decent equity market. And I think we're in a higher for longer interest rate period. The Fed has said their target is 2%. You have to take them at their word that that is where they're aiming for. Yesterday, Powell actually indicated that the inflation picture was a little bit stickier and that they may have to adjust their neutral rate a little bit higher than they otherwise had been. So that's a first crack in the armor and an acknowledgement from the Fed that the 2% target may be adjusting at some point soon, which isn't necessarily a bad thing. At least we know what the playing field looks like.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman.
Sorry?
You seem to be there on labor, so what else?
You know, I would say we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now.
The real headline was the fact that the inflationary picture remains intact. The disinflation narrative that we're all hoping for to some degree seems to be continuing to hit some bumps in the road, for lack of a better way of putting it. Therefore, reflation continues to be a concern, and I think these numbers across the board solidify that. This weekend, I saw so many news stories about the eggs and the price of eggs and what's going on there. You know, if you look across the board at all sorts of food and those sorts of inputs, it's a challenge. And as you dip down into the lower quintiles of the earnings for the individual consumers out there, it's harder and harder. It hits their pocketbook a little bit more difficult. I think Trump is talking his game, so to speak, and he's going to do that. He will continue to do that. I think the Fed has continued to reiterate their autonomy, and they're doing a very good job at remaining above the fray and sticking to their game plan, which is managing through their dual mandates with regard to low inflation, stable prices, yet a robust economy with healthy employment.